Hey guys, it's Hannah Bernard, and this is the weekly market wrap-up. Domestic and global markets received a very unexpected boost this week after Fed Chairman Ben Bernanke announced that the Fed would not be reducing its controversial quantitative easing program in the immediate future. The announced delay in QE tapering set a huge wave of positive trading on Wednesday. The news was great for the Dow, which was trading flat prior to the announcement. The boost delivered the Dow a 147-point bump to close at a record 15,677. The S&P 500 also broke its previous record when it finished the session at 1,725 points. Thank you, Fed. But as always, with a market boost based on these types of announcements, we have to ask whether bullish trading can be sustained. The Fed announcement also reverberated through other areas of finance. The sudden shock to the system registered on paper as a flight to safety, with yields on 10-year Treasury dropping to 2.7%. Gold also had an astonishing 4.5% rally, with the yellow metal closing up at $13.66. And not to be outdone, global markets also rang up the easy cash registers, with Germany in particular at all-time highs, which gives further evidence for the bulls that Europe is on a path to recovery. All right, let's talk currencies, which experienced wild fluctuations due to Mr. Bernanke's shocking announcement. The US dollar index was range-bound for much of the week until it took a dramatic spill following Wednesday's announcement. It was attempting a small recovery during intraday trading, but the fundamentals suggest a retest of the 79 level. The dollar-yen pair initially took a surprising hit against a declining dollar before eventually pulling back up. Traders are probably trying to absorb the long-term impact of the Fed announcement, which is perhaps one reason why we haven't seen a decisive challenge of the 100 level. With the tapering delay, the euro responded in a textbook manner by jumping up to the 135 level and may likely stay there so long as the EU continues to post positive trending numbers. As always, we have to report who rocked and who sucked this week. Our winner this week is Rite Aid, ticker symbol RAD. Shares of the company shot up over 23% during intraday trading before closing at $4.58. The momentum was based on an impressive string of quarterly profits combined with an upbeat full-year guidance. Year-over-year margin ratios are trending bullishly, which showcases that they have a smart management team behind them. On a quarterly basis, margins have been at parity, which suggests that Rite Aid's growth curve is more steady and conservative. Our loser for this week is Pure One Imports, ticker symbol PIR. Shares dropped nearly 14% after a second quarter earnings misrocked investors. This doesn't seem like a huge shock, as problems were telegraphed earlier this year when the company posted a 10% increase in inventory in the context of a bearish margin curve. Further investment is risky unless management can cure this moving liability. Well, those are our winners and losers for this week. Now we want you to weigh in. You tell us in the comments section below what company is the top pick and the stinker for this week. And last but certainly not least, let's talk about precious metals, and the roller coaster ride is heading up this week. As we mentioned earlier, precious metals received a huge lift on Wednesday, with gold currently trading over $13.60 and silver firmly above the $23 level. Despite the recent enthusiasm, we have to acknowledge that the metals took a huge dive since late August, and both gold and silver will need to attack their 200-day moving averages to confirm the start of a new bull run. Finally, palladium is approaching the 740 level after taking that scary dip below 690 last week. In a role reversal, palladium found itself struggling below both the 50 and 200-day moving averages. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. I really hope you do enjoy this weekend, but before you leave, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For VNN, I'm Hannah Bernard.